Now we take a look at the bigger picture. Phil Palumbo is with us, President, Chief Investment Officer, Palumbo Wealth Management. Great to see you. How are you feeling about the markets? I mean, we're not far off from the highs, but a lot to digest. You're going to have maybe a government shutdown. You'll have pending home sales. You'll have jobs prints, which could be weak or strong. We have a wild card this week, don't we?
Longer term, looking out a year or even 2 years, my story really hasn't changed. I'm still optimistic about the pro-business growth policies that we currently have between the big, beautiful bill, the onshoring we're going to see, deregulation will start to kick in really next year. And I think earnings will continue to grow, which is a positive. My biggest issue in the very, very short term here is a lot of investors are getting complacent. A lot of investors are now chasing performance. A lot of investors have this fear of missing out. And they're talking to their friends and cousins and family members and chasing returns and all the things we don't want investors to do. And that's my biggest concern in a very short term here. And really because of that, we can see this melt up going into year end because of really investors chasing performance.
So at the same time, people are running to gold. I mean, gold is at a record high again today. Why is that happening? Are people looking for safe havens?
Yeah, so I've said this numerous times. So, within our balanced portfolios for clients who've been with us for a while, owned a nice position in gold, somewhere around between 7 and 10%. That's run out to around 12%. And, we've always looked at gold as a hedge against a downward economic situation and or an inflationary situation. So with the dollar down, rates down, you've seen gold rally on that. It's interesting when you really think about gold, you kind of say to yourself, okay, well, is there some type of potential shock that's going to happen? And investors are getting ahead of that and buying gold. I don't have the answer to that, but we have to be suspect of that. But I really think it's more on the back of inflationary pressures that we're seeing, which are not out of control, but there is some. Interest rates down, dollar down, and gold up.
Yeah, understood. I mean, would you buy, I know you have some stock picks for us. I can't wait to get to those. But would you buy gold miners or gold? Is there still upside potential?
Yeah, actually, I'm doing the opposite. I'm just trimming some of my gold, which we've done really well over the past 5 years, and I'm buying Bitcoin with that as a way to just sort of take some profits off the table. And I do believe Bitcoin is a long-term story for those who are patient and understand volatility of it. And I think with the limited supply, I think we're going to continue to see demand come into Bitcoin, which will propel the price higher. I think there's better potential in Bitcoin than gold over the next 3 to 5 years, and that's how I look at it.
I see. Okay. And how do you go about buying Bitcoin? Are you doing like IBIT or ETFs or Bitcoin itself through a wallet?
Yeah. So we're buying it through IBIT, IBIT, BlackRock. We're very confident in the holdings at BlackRock versus buying it through Coinbase. Just not confident in the whole wallet trade and how that whole thing works. So for clients, we feel really sanguine about owning Bitcoin through the IBIT through BlackRock.
Right, understood. Let's get to a name like Amazon, Phil. Why do you like a name like Amazon? What kind of upside potential does this have? Because it's not just a retailer.
Yeah, so the core of how we invest our clients' capital, which are clients who have really sold their businesses or held that business over a long period of time, we're looking to own really good quality businesses. Amazon fits that bill very well. They're cash flow generative, dominate in their industry, which are two critical points in how we look at things. Great management. And really on top of it, so Amazon is no longer just an e-commerce business. They're really becoming a tech juggernaut from the standpoint that they're taking advantage of ad spending, which is looking to grow by 20 to 25% going forward. And their AWS business is doing phenomenally well. They're a little bit on the growth side, they came in around 17, 18%, a little bit less than Google and Microsoft's cloud business, but overall still growing. If you take those two businesses together, we believe they can be as large as the e-commerce business. So we're talking about investing in such a quality business. Recently, it's off its high. Forward multiple, to me, isn't banned relative to where the S&P is at, but you're getting much better growth in Amazon. So over the long term, I think it's a great business to own.
Okay, and then when we look at a name like Nike, where's the upside to Nike? What's going to be the catalyst for a name like this?
Yeah, so Nike's a more complex story. The reason why it's complex, because first of all, they have great competition. As we know, On is one of the big players out there that maybe taking a little bit of market share away. That's the first thing. And the second thing, I think over the past couple, 3 years, management really has not done a great job with the strategy of going direct to consumer and taking out some of the middlemen. And I think they realize that. The new CEO, Elliott, I believe that he has it right this time around. And I do think his new strategy, which is win now, will prevail, kind of getting back to the old roots of what Nike's about, focusing on the brand, focusing on athletes all around the world. And if now some of the channel checks, which is the part that interested me, promotions have declined year over year for Labor Day and even for the month of September. So that tells me there's some confidence in the brand, or confidence at least coming back, or management saying, hey, we don't need promotions now. And all of that is positive to potential margins down the road. I think earnings tomorrow, again, could be volatile for new investors. We start to edge into the position. We're going to edge into it more, whatever happens tomorrow. But my view is that CEO Elliott Hill come out with positive forward guidance to propel the stock upward.
And it's interesting because I was just looking here also at XRP, Solana, Dogecoin's ETF filings some of the ETF filings have been withdrawn. I start to wonder, is there going to be a shift? Because we were talking about crypto earlier, and that caught my eye. The ETFs brought a lot of optimism to crypto overall. I don't know why these particular ETFs have been pulled back, but the big picture is you just still think that crypto has a path, right?
Well, when you say crypto, I mean, crypto is a large term. For me, I like to keep things simple and play with the biggest players. So IBIT, or Bitcoin in general, to me is the biggest player out there, $2 trillion market cap. When we think about equities, we think about fixed income. We think about gold, right, at $20 trillion, equities at 60 trillion or greater, fixed income at 100 trillion or greater. Bitcoin's at 2 trillion, and I just think that demand's going to continue. I think they made main stage finally. I think, if you look at volatility over the past 5 years versus today, volatility has subsided. XRP and Solana and others have tremendous volatility. And so I just don't think maybe they're ready for main stage, although I do think they're going to perform well also the next 3 to 5 years. But I'm just more comfortable owning the larger player, which is Bitcoin.
Right. Yeah, IBIT, as you mentioned, Amazon, Nike. Phil Palumbo, great to see you, President, Chief Investment Officer, Palumbo Wealth Management. Thank you, Phil, so much. Great to see you.